Hey guys, Toby Mathis here, and today we're going to go over how to lose your charitable deduction. We're going to call this one Charitable Giving Gone Wrong, 3 Ways to Lose Your Deduction. And I'm not talking about little minor deductions that you lose. I'm talking about there are cases where it was $64 million because they forgot to do one little thing, $1.8 million because they put it on the wrong form, $18.5 million because they didn't have the right formality met. And there's even a case, $25,000 cash. Everybody knows they gave it to the charity, but they're missing one sentence and they lose the deduction. So if you give money, this is why you watch today. And I have Karim Hanafy on. He's the head of Anderson Business Advisors nonprofit division, former IRS attorney in the exempt giving, and a really, really great guy. Welcome, Karim.
Hey, Toby. It's great to be here.
All right, let's dive in and let's give these folks a ton of value in a short period of time. I really want you to give them what the rules are and how they can make sure that if they are giving, that they do not lose that deduction.
Okay. And in doing this and discussing this and presenting this about the 3 ways to lose your deduction, what I'm going to do is show you exactly what you need to ensure that that you can get the deduction for these charitable contributions that you make. And keep in mind, as you're approaching the tax filing season and employees are sending you a W-2, banks and financial institutions are sending you a 1099. If you're an independent contractor, you're receiving a 1099. But how about the nonprofit organization that you donated to? Did they give you a document for your charitable contributions? Because they have to give you a receipt, and not just any receipt, but it has to be a proper receipt. So I'm going to be covering the types of documentation required depending on the types of contributions and the amount that you contribute. So the documentation rules for cash and non-cash contributions. So as an overview of the documentation rules by the IRS, it requires proper, and I'm emphasizing this, proper documentation. Not any documentation will do. It's proper. It has to be compliant with the IRS regulations. And it's for these charitable contributions in order to claim the tax deductions. And the rules differ for cash and non-cash contributions and the amount of the contribution as well. And for reference, IRS publication 1771.
Hey, Kareem, this is great. I could see that you're going to hit it right here, because if I'm sitting in church and I put $20 into a giving plate, do I not have documentation that shows that would I not be able to write that off?
No, you can't. And even if you give a check for $20, or let's say you give a check for $300, there's slightly different rules. If you give a check for $300 and they give you a receipt saying thank you for this contribution, and they put $300 and you put your name, that's not going to work either. So it requires proper language within these documents that you have. You have to have proof of these donations that you've made, including the cash contributions that you made. So small donations, and these are the misconceptions that we see and that I see all the time, especially with our clients as they're making contributions. And I always tell them, if you made a donation, send me the letter. Let me look at it and see. Small donations require documentation. So the misconception is it doesn't require it. Another misconception is a thank you note is enough, and that is not the case. Also, a canceled check. Many people think that a canceled check is sufficient proof. So if you're donating something of more than $250 or more, a canceled check is not sufficient. Also, regarding appraisals for certain types of high value donations, many people assume mistakenly that, let's say you donate real estate and you want to appraise it, just get onto Zillow and see what it would cost for comparables for real estate in the area where you've made that donation. And again, that is not the right way to do the appraisals as well. And that's proof of the cases where they were fought through tax court and it was disallowed as well. So these are the misconceptions that you see.
So Kareem, I'm in church and I write a check for $50. Do I have to get something back from the church or any charity? I write a check for $50 and I give it to the American Red Cross. Do I have to get something back from them?
Well, I'm glad you mentioned that, because for cash contributions for less than $250, all you need is proof, bank record. It could be a canceled check. It could be your credit card statement as well. But you want to make sure that you document, including the organization's name, the date, and the amount of the contribution. So these are required, and that's all that you need for proof if it's for less than $250. Now, if it's for $250 or more, well, now it changes. The rules are different. It's more complicated, and this is where a lot of individuals, their contributions and their contributions become disallowed because of the fact that they don't have the proper documentation. When it comes to making a donation of $250 or more, well, now there's a terminology the IRS uses. It's called a written acknowledgement letter, which you have to receive from the 501c3. So I'm putting these in quotes here, written acknowledgement letter. It must include the organization's name, the donation amount, and this is the most important part, the statement that no goods or services were provided in exchange, if applicable. So if you didn't receive anything in exchange, you have to have that sentence in there.
And there are cases where you got this too late. They weren't contemporaneous, and it did not have that statement on it. And the IRS, again, knows you made the contribution. They could see the money went to charity. Nobody's questioning it, but you're not entitled to deduct it because you did not have this magic language on there. Seems stupid. Seems ridiculous, but you will lose the deduction if you're audited. Now, Karim, are these cumulative? Like if I give $50 a month and I write a check every month to an organization, is this $250 rule cumulative or is it per event?
It's per event. So each time you donate, if it's $50, then all you need is a canceled check for something like that. Now, if you include the cumulative amount at the end of the year, well, now you're going to have this written acknowledgement letter.
So if you just give a one-time, here's $2,500, then you're going to have the letter. But if I give $50 a week, I'm going to be about the same amount, but I can have the canceled checks, and that's going to be sufficient.
Yes, that would be sufficient.
All right. What about other things besides cash?
So for non-cash contributions of $250 or more, again, the same rules with $250 or more. Let's start with stocks because documenting stock donations, that's pretty easy to do. Nevertheless, it still does require that you follow these rules. Again, you need that written acknowledgement letter. And as you mentioned, contemporaneously, you have to receive this letter before you file your taxes. If you get audited and then you submit and you receive a letter from the organization and it includes all of this language here, it's still not contemporaneous. So you have to receive this letter before you file your taxes, whether it's April the 15th or if you file for an extension.
Now, there's a form, the 8283, and that needs to be signed by the recipient, right? That your charity needs to sign that, correct?
Yeah, but not. It's not always required in certain circumstances. So what we say is, if you have to fill out the 8283, make sure that the charity does sign it. There's a certain threshold. If it's more than $5,000, typically the charity would be required to sign it. But we say make sure that they sign it every single time, just to be on the safe side, because you have to produce this form 8283 anyway.
Yeah, it has to be attached to your return. So you don't need it if you are less than, if it's the cash less than what, $250. If you're non-cash and it's more than $250, you're doing this form 8283 no matter what. Whether, I know there's a lot, I think there's different standards. If it's over what, $5,000 or something, then all of a sudden we have appraisal requirements and things. But publicly traded stocks, actually you don't have to on publicly traded stocks because it's an obvious marketplace, but everything else I think we have to, right?
Yeah, exactly. So with the publicly traded stock, you just find the price, the high and the low for the day that you made the contribution, and just take the middle, the number in the middle. So documenting again the date of the contribution. The monetary value is not required by the nonprofit. So anytime you are making non-cash contributions to the nonprofit, to the 501c3, they're not required to issue a monetary value. It's on you as the donor to determine what the valuation is, which is including for the publicly traded stocks. And again, you need the statement that no goods or services were provided. So chances are you're going to have to work with the organization to be able to get this information from them, to be able to get this letter. And again, for this form 8283, as you mentioned, anything more than $500, then you you have to have this Form 8283 that has to be issued.
Now, there's kissing cousin to stock is like if I'm doing Bitcoin, Ethereum, cryptos. Do I have the same rules for crypto as far as knowing what the value is? Because I can trade it pretty much like I go onto Robinhood and trade it. Is it the same rules or is it different?
Unfortunately, it's different, which is unusual. And first time we ever saw this, we were kind of surprised because this is a market of which it's easy to identify and see the pricing of it 24 hours a day, 7 days a week. You don't even get that with stocks. Even though stocks right now do trade on the weekends, they're not as liquid as crypto. It's very easy to get the pricing for crypto at any point. But unfortunately, IRS has said it, and they reaffirmed this last year, that it is not a tangible item. It's an intangible item. And as a result of that, it does require that you get this appraised, even though you can find out what the price of it is. And we've seen what the appraisers do. It's very easy. They simply go to the date that you made the contribution, and then they look at the high and the low, and they take the number in the middle. But unfortunately, you have to have this. Otherwise, it will be disallowed for crypto.
How about this? If I am giving a small amount of crypto, let's say it's $100 worth of crypto, do I have to go through these same hoops? Because the appraisal they're like $200-300. That would be more than the gift.
If it's more than $500, that's your threshold for this, is that you would have to have it. And, but for anything, you would have to have it in order to get the deduction for the crypto.
But if I gave $100 worth of crypto, so long as I have a receipt acknowledging the receipt, then I'm okay.
Yeah.
Right. So this is really, if it's over $500, which I think anytime you're giving crypto, you probably would. Like if somebody gives, they got lucky and they have a whole bunch of Bitcoin, or they were smart and they have a whole bunch of Bitcoin and they're like, hey, I'm going to give a couple Bitcoin away. And they're, $80, $90, $100,000 a piece. You got to make sure you got that appraisal.
Yeah. And again, make sure you have the written acknowledgement letter contemporaneously, including the date, value, and again, the statement that no goods or services were provided. This is the most important. Anytime I get a letter from a nonprofit where I made a contribution, that's the first thing I'm looking for. I want to see if that statement is on there, because if it's not, they have to send me a new letter.
Now, I've done this. I've given real estate. So you talked about stocks, you talked about crypto, but what about the person that's giving an interest or giving a property away?
Okay. And really quick, I'll answer that just as a chart to give you kind of the similarities. As you can see with the crypto, is that you have to have signatures. The charity has to sign it for anything that's more than $5,000, which is an important thing when you have to fill out this Form 8283. And you have to make sure you get it by a qualified appraiser. Now for the real estate contributions. Very similar when it comes to real estate. You have to have the written acknowledgement letter. Again, having the sentence that no goods or services were given in exchange for the contribution. You have to get a qualified appraisal by a qualified appraiser. And you have to have Form 8283 as well. So all of these are required. And again, for the qualified appraiser, again, it was disallowed in tax court. Tax court, not only the IRS wasn't disputing the contribution, tax court didn't dispute it either, but they said you didn't follow the rules and regulations. You can't have anyone appraising this, and you can't do it yourself. It needs to be from someone who's qualified to appraise the property.
And I've seen that get attacked in court too, where you had somebody who had experience in it, but they had no appraiser qualifications, and the court said, nah. Even though it definitely, like, they know what the value was. It's not like it's a mystery. And but if they find a way, oh, you didn't dot that I or cross that T, let's deny the donation as a deduction. That's all they're doing. It's like, no, the donation was made. We know the value of it. It's pretty obvious, but we're going to give you zero because the appraiser wasn't qualified, or because you didn't fill out or they didn't sign the 8283, the charity, or, it's this little minutia can cost you everything.
Yeah, you have to strictly comply with these rules. There's no substantial compliance that's permitted. So again, for the contributions, 250 or more, you need the written acknowledgement letter. More than 500, you have to have 8283. And then if it's more than 5,000, qualified appraisal plus Form 8283 signed by the charity. Now for art. Art is an interesting one for the reporting requirements.
This seems like it could be ripe for abuse. After watching Biden's son selling stuff, like, hey, yeah, this art's worth 300,000. I wonder how many he donated, right?
Well, yeah, and you know that this was the issue, is that art was subject to a lot of abuse. So what would happen? People would donate to a nonprofit that they have. Perhaps it's within their same house, and they're hanging the artwork up on the wall, and they want to get the deduction for it. So the IRS said, if you're going to do something like that, again, you need the written acknowledgement, you need the qualified appraisal, Form 8283. But in addition, if it's not related to the use of what the nonprofit is doing, then you can only deduct what you paid for it. So imagine that you have this appreciated art, one that's gone up significantly in price. You can't deduct the fair market value of it. You can only deduct what you paid for it if it's not related. So of course, museums come to mind as these are related use, but for any other nonprofit, it's not going to be related. So you're going to be limited to how much you can deduct.
Wow.
And yeah, and these rules are, as we said, they're pretty strict with this. Now for donation of used goods, toys, books, and clothes, you know, the thing with this is that you're really just trying to determine kind of what is good condition, you know, for used goods that you're donating. Now you need to, again, have the same reporting requirements. It's on you to determine what the value of it is. But the interesting thing is, as we mentioned before with Form 8283, if it's worth more than $500, then you have to have Form 8283. So imagine you have books and each one of them is worth $10. But if you donate hundreds of books as a group, if they're worth more than $500, then you have to fill out Form 8283. Now, a lot of them will just keep it at below $500, so they don't have to fill out this Form 8283. But if you're going to donate a group of similar items and you want to get a deduction of more than $500, then you have to have Form 8283. Similarly, for the $5,000, they don't want to get the qualified appraiser, so they'll make sure that it doesn't exceed that amount to avoid that.
We're just dealing with this on an estate where they were trying to get rid of a bunch of stuff, and they were like, "Oh, we're just going to go down and get a thing from the Goodwill." You know, they just give you the little receipt, and I was like, "If it's going to be more than $500, you're going to have to do the tax form."
Yeah, requiring a spreadsheet, for example, of all the items and the documents that you have in there. So,
and you have to get the charity to sign it. So the guy there might sign your 8283 who's accepting all these things. Make sure you have it listed out ahead of time. And then it's going to be tough on the valuation, right? So if it ends up being everything's up to, let's say it's $2,000 worth of household goods, you have them all listed out. How deep do you have to go? Like, can I just get values off the internet, off of eBay, or do I have to get an appraisal?
No, you can just get, off of eBay, the internet.
And if it goes over 5,000, then I have to have the appraisal?
Yeah. And you rarely see that unless it's something that's very valuable, antiques and collectibles like that. But when you have these group of items that you're donating, no one wants to go above 5,000 for that.
We ended up just on the estate is consigning a lot of it, just saying, hey, you know what, don't just give it away. Go out there and see if you can't make a little bit of money from it. It's annoying, but it's better than not getting any deduction. Either that or just say, hey, I don't need the deduction. I'm not going to worry about it.
Yeah. So for something like this, the amount that you're donating and the items that you're doing and the documentation for it, for a lot of people, it's not even worth the headache to go over a certain amount for it. They're just going to donate a stack of things and just, kind of give it.
They're just going to say it's $4,999. And then see what the IRS does. What about if I give the cars for kids and all that stuff? What about all this? Yeah, I'm always hearing this on the radio. Everybody wants my car, my old beater.
Yeah, well, cars have some reporting requirements too. Now, less than 500, again, you need a written acknowledgement. Now, once you go above 500, now you need another form, 1098C. And in addition to that, although it's unclear, it seems like with the instructions within 1098C, it's telling you that you also need to have the written acknowledgement. Even though the 1098C has all that required language, seems to indicate you still need the written acknowledgement letter to have it to include it with this 1098C.
The 1098C is when they sell the car, right? And then they give you, the charity sends you the 1098C.
No, that's an 80, I think that's 8282 is what you're referring to.
Oh, when they
So
sell it. How do you get the 1098C?
So you can get the IRS form for 1098C just going online to be able to pick, you can fill that
I
out.
know that if they sell it, so like if I give it to because I gave a car years ago, and they said, oh, $500. I was like, it's not $500. You're going to take it to the auction. You're going to sell it, and it was something more than that. Getting that number was the trick, and then you got the donation of the higher whatever the amount was. That was I guess it would be the higher amount, but if that was higher, then you were good. Otherwise, what, you got the 500?
Yeah, so if they keep the vehicle, then of course you're going to look and determine the valuation of it. Blue book value you can do. If they sell the vehicle, well, then whatever it is that they collected, whatever they received for selling the vehicle, that's what you would have to report. Now, the thing about that is that may be after you have made the donation, made the contribution, reported on your tax return, and then within 2 years, they may decide they're going to sell the vehicle, and then they come back to you with that. That's the only problem with, when donating vehicles.
Yeah, wow. And then in which case you're limited. So you could, oh shoot, I thought it was $20,000, but when they sold it, they got 10. My donation's gonna be limited to the 10.
Yeah, and they IRS of course realized there was a lot of abuse with this when people were donating these beaten up cars and thinking this was the value of it, and then it turns out as a nonprofit sells this not the vehicles, well then that's what the true value is of the car, and that's why they require the donors to report the amount that was sold if they sell the vehicles.
So there's two ways. So again, if you donate a car, the charities, if they're going to keep it, like, hey, I donated it to a local food bank that needs a truck, and I gave them a truck, and they're going to use that truck, you're probably safe. But if I'm donating it to Cars for Kids or whatever, you might want to wait until you get the valuation of what they actually sell it for.
Yeah.
Maybe it's more, because maybe you write it off and you think it's $500 and they sell it, and it gets 1,000. Congratulations, you get a little bit higher donation. But usually it's in reverse. Oh, my blue book is 20, and they sell it, it's for 10. You're going to be limited to the 10.
Now, as we mentioned as well, I should add this. We were talking about contemporaneous, having to receive this letter before you file your taxes. Well, now this 1098C, in addition, you have to receive this within 30 days of your donation. So your timing is important for all of these forms and the documentation that you have to do when it comes to making contributions.
Otherwise, you lose it, right?
Yes. Yeah.
So this is why we said, like, there's 3 ways to lose your donation. This is why you got to make sure that even though you're the giver, you're the donor, you're the one doing the good thing, you got to get that charity to do their part. Otherwise, you're not going to get your tax deduction. And it's up to you.
Yeah. And a few additional things, as we mentioned before, you have to receive this letter before filing the tax return or by the due date, whichever is earlier. The charity has to issue this letter to the donor, even if it's your own nonprofit. We get this all the time. For many of our clients, they've set up their own nonprofit, and they tell us, I don't need a letter because this is my nonprofit. You still need to have that letter.
Make sure you do your formalities, guys.
Exactly. And then finally, the contribution of services is not tax deductible. So if you're providing free legal services, medical care, and you normally would charge patients, for example, $2,000, and you're doing it for free, the $2,000 is not tax deductible. But any expenses that you incur in providing these services, those would be tax deductible. But again, you need that written acknowledgement letter if the expenses are $250 or more.
And the reason is this: if I worked and I did $2,000 worth of work for a charity, and I donate it, the IRS says the charity paid me $2,000, and then I gave them $2,000 back. It's zero. It's not negative 2,000. If you decide to give money, that's great. You're going to get the donation for that or something else of value. But usually there has to be two sides to it. Same thing when you're doing leases. Like if I give a free lease to a charity, the IRS is going to look at it as though they paid you fair market value and you donated. um, those that back to the charity. So just be aware that that could actually run up against an AGI issue and limitation, and you have all those other things you get to worry about. So make sure you're working with somebody like Karim when you're thinking of doing some of these creative charitable donations, because there's rules with regards to all this that could cause you to lose it if you don't. There are some good cases too, right?
Yeah. So these cases here, and you mentioned it at the beginning, and you must strictly comply, as we're saying here. These are recent tax court cases.
64 million. And it wasn't that there was any question that it was made. Everybody knew that the $64 million donation was made. The only issue was the IRS said that's great, but you can't deduct it.
That's right. For each of these, all four of these, they acknowledge there was no fraud involved. They acknowledge the fact that the donations were made. They just didn't follow these rules. They didn't follow the rules and the regulations.
All right, give us the rules.
All right. In summary, documentation is key. And we always say this with everything we have here when it comes to expenses and getting deductions. Maintain your proper records, whether it's cash or non-cash, to substantiate your deductions. And for cash and non-cash contributions, you have to have that contemporaneous written acknowledgement letter. You have to have that letter before you file your taxes. For non-cash, it may require an IRS Form 8283 for donations over 500 and a qualified appraiser for anything over 5,000. And then finally, Form 1098C for vehicles. And again, I'm saying it again, contemporaneous is critical. The timing is important. That sentence is critical. No goods or services were given in exchange for the donation. And strict compliance matters. And finally, when in doubt, seek professional advice.
And very well put. All right, guys, if you like this type of information, please like and subscribe. Karim, there you go. You're putting your information right up on the screen. You could reach out to Karim. I'll put it in the show notes as well. If you liked what Karim had to say, please do that subscription, and please give a little thumbs up. If you have any questions, put them down in the comments. We do look at the comments, and Karim may look at them once in a while, and he might be able to point you in the right direction if you ask. He's not going to give advice via the comment section, but you can ask questions, and then he might invite you to reach out to our staff, and they can help you. Guys, again, thanks for joining us. Karim, thank you for giving us that great teaching. We'll have you again to go over some more of this stuff. And just know, like, if you're a giver, make sure you get the benefit of that gift.